when Nirmala Sitharaman, our finance minister, along with SEBI chairman, guided us to what they're setting up as corporate debt market development fund. India is a very broad market, especially in terms of corporate debt market. So there came a point that they understood that they won't be able to honor the commitment to the investors, and hence they closed out 6 debt schemes.
Hi guys, welcome to the yet another episode of Cut the Noise, where we cut the noise around the latest news and topics happening in the finance industry. So today we have Shivanshu with us. Hi Shivanshu.
Hi, thanks for having me, Megha.
So Shivanshu, we recently heard that our finance minister Nirmala Sitharaman launched a fund called CDMDF.
When Nirmala Sitharaman, our finance minister, along with SEBI chairman, guided us to what they're setting up as corporate debt market development fund. So this is a fund that they are setting up in which AMCs will infuse 10% of the fund, and 90% of the fund will be coming from Government of India. And overall, this fund would be utilized in such a way to meet any liquidity issues that will incur in the corporate bond market going forward. So I think that's a huge positive step.
So tell me, what are the latest developments around corporate debt market?
Sure, good question. In order to understand that, if you see India as a very broad market, especially in terms of corporate debt market, it is very illiquid, right? And you are already exposed to many risks when it comes to corporate debt. One could be issuer's risk, liquidity risk, interest rate risk, and add on liquidity risk. Liquidity risk would comprise of, for example, if you have a holding in corporate debt, you are not able to sell those holdings. Plus, even if you are able to sell those holdings, you will be able to sell them at a very deep discount. So that consists of the liquidity risk. Now, in order to cater that, the government has set up this fund so that in case of any illiquid scenario, they can, AMCs can dip into this corpus and, satisfy the investors. It has happened in the past, in 2008 financial crisis, and even in 2020 with the Franklin Templeton case, we experienced this issue, and I think this could be a very positive step in that direction to address the, what caused those incidents.
So Shivanshu, I have another question here. Can you please exactly tell me what happened in Franklin Templeton?
So firstly, let's understand what Franklin Templeton actually is. So it's a AMC, asset management company based out of America, and it is, last I checked, in top 10 of the AMCs, straight with the likes of BlackRock, Blackstone, Vanguard, you name it. So obviously it has a huge footprint. In India, it operates many debt mutual funds, debt funds, debt schemes, and even on the equity side. So what exactly happened was they backed certain corporate bonds which didn't really come through. So one was ILNFS, they defaulted. One was Reliance Communication, one was Vodafone Idea, SL Group. So their investments were, the issuers of those corporate bonds were not at all reliable. So what happened was, obviously investors understood that this fund is not going to perform well, and then they reached out to Franklin Templeton to just redeem their money, right? And the NAV for the fund was falling every day. So even more investors lined up in order to panic sell their investments. But what happened was, obviously Franklin Templeton could honor those commitments in two ways, right? One way would be to find the alternative buyer, but obviously there was no buyer at that time. That's why this is the liquidity crisis. Second was, they could either take a loan from a bank and pay it off, but obviously no AMC does it. Third possible way, and the way they adopted, was to sell the underlying securities, and then whatever the proceeds of those securities will be able to pass it on to the investors. But what happens in such a panic scenario, when you go out and sell those bonds, you will be selling them at a deep discount, first of all, and even for some securities which are of maybe speculative nature, you won't be able to sell them. So there came a point that they understood that they won't be able to honor the commitment to the investors, and hence they closed out 6 debt schemes.
So I have another question. How will this fund help prevent situations like these?
Yeah, so basically if we go back to the Franklin Templeton case, and if this fund was set up, so ideally what would have happened is, if this fund was there, that in such a scenario where the investors are running in to redeem their funds, the AMC would have turned to this fund and said that maybe I need this corpus, right? My investors are wanting to redeem it, and in that case they will have prevented the scenario of a panic, right? So what happened is, when you are not able to sell those securities at a good rate, plus you are not able to honor your commitments to the investors, more and more investors would line up to redeem their funds. So in such a scenario, when the investors would have a belief that there is a fund which will be taking care of all the shortcomings, so they won't be running after AMC to even panic sell, and even at a discounted rate. So that could have been prevented in such a way. In conclusion, I think it's a much needed positive steps. All the stakeholders, including the AMCs, SEBI, Ministry of Finance, have stepped up and addressed this big issue which has been propping up for a while. Plus, I think it's a huge bump up for the retail investors to believe in the credit system of India, until and unless the market matures going forward, and to address this problem of illiquidity time and again.
So that's it, guys. I hope we were able to cut the noise around this latest topic. If you have any doubts, any questions, write down your questions in the comment box below and we'll try to answer that. We'll see you in the next episode of Cut the Noise. Till then, like this video, share this video with your friends, and don't forget to subscribe to our channel, Grip Invest.